The European Central Bank is sending a warning the market cannot ignore.
Crypto is no longer just speculation, it is becoming part of the system.
And now, that system is starting to push back with real force.
Behind the scenes, a silent battle over money is already unfolding.
This is not about Bitcoin alone. It is about control.
Because whoever controls money controls the entire economy.
And Europe is not willing to lose that control easily.
What began as freedom is now colliding with regulation.
And the collision is happening faster than anyone expected.
With the MiCA regulation now active, the European Union is the first major jurisdiction globally to implement a comprehensive.
It is called Markets in Crypto Assets, or simply MiCA.
This regulation is designed to bring order into a chaotic space.
But more importantly, it is designed to establish control.
Under MiCA, we must adhere to strict operational rules, ensuring market integrity and investor protection. They must disclose risks, hold reserves, and operate under strict supervision.
For the first time, crypto assets are being categorized like financial instruments.
But not all crypto assets are treated the same way.
Some are considered harmless, while others are seen as systemic threats.
And one category stands above the rest in terms of risk.
That category is stablecoins, the bridge between crypto and real money. Stablecoins connect digital assets directly to traditional currencies.
And that is exactly what makes them dangerous to central banks.
Because they can quietly replace the role of national currencies.
The ECB is not afraid of volatility. It is afraid of substitution.
If people use stablecoins, they may stop using the euro.
And if the euro loses usage, it loses power.
Monetary policy depends on controlling the flow of money. But stablecoins operate completely outside that control. They are creating a parallel financial system beyond central authority. And that system is growing faster than regulators can respond.
This introduces risks that traditional systems were never designed for.
A digital bank run could happen within seconds, not days.
Liquidity could disappear before authorities have time to react.
As you can see, our reserve assets are primarily in US Treasuries and cash. Now let's look at the opportunities.
That means Europe could become dependent on external financial systems.
Especially those dominated by the United States dollar.
This creates a hidden form of digital dollarization.
And that is something the ECB cannot accept.
Because monetary sovereignty is not optional, it is essential.
Means control over economic stability.
And losing that control would have long-term consequences.
So the response must be strategic, not reactive.
Regulation alone is not enough to solve the problem. The system must evolve to compete with crypto itself.
That is where the concept of a digital euro begins to take shape.
A new form of money designed specifically for the digital age.
But still fully controlled by the central bank.
This creates a system where innovation exists, but control remains intact.
The introduction of MiCA is already changing the structure of the market.
Some stablecoins may disappear from the region entirely.
Others will need to comply with strict reserve and transparency rules.
This creates new friction in how crypto is used across the system.
But it also creates new opportunities for institutional players.
Market. Tokenization allows us to transform traditional assets like these bonds and equities into secure.
The line between traditional finance and crypto is starting to disappear.
And regulation is accelerating that convergence faster than expected.
At the same time, innovation may slow under heavy regulation. Smaller projects may struggle to survive in this new environment.
The market could become more centralized than it was before.
Which raises questions about what crypto was originally meant to be.
Freedom may come at the cost of control, or control at the cost of freedom.
The ECB is not trying to destroy crypto entirely.
It is trying to reshape it into a system it can control.
This framework represents the full integration of our markets, a strategic control level that ensures stability.
The digital euro represents the next phase of this strategy.
With the introduction of the digital euro, we ensure complete financial stability and regulatory control across the eurozone.
We have successfully combined innovation with centralized authority in a single, resilient system.
And it could redefine how money moves across the world. The outcome of this transformation is still uncertain.
But one truth is already becoming clear.